right, everybody. Thanks for coming today. We've got a good attendance. Looks like we're up to about 107 and growing. Welcome to tonight's class. Happy Easter weekend, everybody. I hope everybody has some good holiday plans for those of you that celebrate it. Anyway, today's presentation, we're going to go ahead and get right to it. As you know, I always get to read one of my favorite things, and that's our legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. I've made my lawyers happy. Let's go ahead and get to the materials. Today I have for his very first MetaStock webinar performance, we're going to introduce Ken Ruth. Ken's a great guy. We've been working with him for just about a year now. I've really helped him kind of code a lot of the methodologies that he uses and that he teaches, and I'm very, very familiar with him. I'm excited. I think we've done a really good job of kind of helping him complete a MetaStock add-on, basically, and some materials and incorporated into his coaching. And so what we want to do today is we want to show it to you. We want to let you see it and kind of see what's involved with it. And with that being said, there's the bio about Ken Ruth. You can read it. And I'm going to go ahead and turn the time over to Ken. Ken, are you ready?
I'm ready.
Welcome. Welcome to the MetaStock classroom.
Thank you, Jeffrey. Yeah, Jeffrey, we've been talking for about a year now. He's been very instrumental in getting this data happen for me and the system programmed. So thank you for your time and interest tonight. I know there's a lot of other things you could be doing, so I appreciate your time. Let's get to the presentation. Well, Jeffrey already read that part. I'll just read the bottom line for myself. All information on or derived from this webinar is for educational purposes only and not intended to provide financial advice. All right. Some of you may be familiar with the book Reminiscences of a Stock Operator. This is a quote from Jesse Livermore. The markets are never wrong, opinions are. And it's important to remember, sometimes we get frustrated and we're trying to solve the markets, and that's not going to happen. So why trend following? Why not swing trading, day trading, intraday trading? Why trend following? Over the years, it's become painfully obvious to most traders that the markets have become increasingly volatile and choppy, making trading more difficult than ever. Trend following often provides a buffer to large volatile swings and random price action, mainly due to the larger stop losses. Trying to trade in volatile markets, trying to trade T-bonds with a $500 stop just isn't going to work anymore. They're having 2 and 3 point moves, which are pretty common occurrences. Always remember too, nobody can wave a magic wand and put you on a path to trading profits and keep you there. It's up to you to manage your money correctly. You need to monitor and observe yourself to minimize the number of mistakes you make. For many traders, everything they do is a mistake. I used to be one of them, and I'm not perfect today either, but we've got to try to minimize our mistakes. So what's the solution? Follow the rules. Traders that consistently follow the rules tend to consistently profit. What are the rules? 4 basic rules of trading. Trade with the trend, cut losses short, let profits run, manage risk. There's probably 5,000 books on Amazon.com that say those same 4 things. I just saved you some money. So trend following. It's what most traders should be doing. It's been proven to generate gargantuan profits over many decades and works equally well in both bull and bear markets. Trend following has been used by great traders such as George Soros, Paul Tudor Jones, Monroe Trout, Ed Seykota, and many others to pull billions of dollars out of the markets. Arguably, trend following is the safest and most reliable way to make money speculating in the futures markets. Done properly, it's possible to amass a fortune using this type of method. This type of method meaning trend following, not mine in particular. Of course, all trading involves risk. No guts, no glory. No free lunch. And let this be clear, I don't pretend to know where the markets are headed, so I won't waste your time forecasting or predicting a future that simply doesn't exist. I'll leave that to the cycle traders. The markets know where they're going, and triple trend will follow them there. So what is triple trend? Triple trend is an end-of-day trend-following trading system designed for the futures markets. It's perfect for traders who want to make a lot of money but don't have the time or inclination to watch the markets all day. Many people work and trade, can't sit in front of a screen. Day trading is probably the fastest way to lose money for many people. It usually turns into a nightmare. So, next slide. I had another thought, but it jumped out of my head. Triple trend works on all futures markets. For best results, I recommend focusing on the markets I list in the prospectus. There's 15 of them. These markets offer the best combination of accuracy, payout ratio, and profits, both over several decades and in recent years. So it's not just curve fitted to the last 3 years or anything like that. Also, these 15 markets are liquid and well diversified across currencies, energies, financials, metals, softs, and grains. So you're not, all your money is just not allocated to one particular commodity or can't come up with the word in my brain at the moment. I was reading something. These are the largest winners over 2011, the largest winners over $5,000. I don't know when to last year with my previous version, Triple Trend version 2.0, my subscribers and my advisory, I think we closed out silver at 46,000 and some change. This one squeezes a little bit more out of it. So many of these trades were taken with the previous version. The numbers were just lower. Okay, on to the system. That white screen, I was hoping to wake everybody up. Most traders are long on enthusiasm and short on discipline. Triple trend short circuits the discipline factor by removing the trader's ego out of the equation with a simple but definitive trade selection process. The moment you begin using triple trend, you'll notice an entirely different way of viewing and trading the markets. It provides a calm solution to anxious, eager, restless, impulsive, anxiety-driven behaviors that many traders, including myself, face with trade selection and stop loss process. When you're just, trading, shooting from the hip, there's a lot of what ifs, waking up in the middle of the night, sweating it out, checking your computer every 30 seconds. Who needs that? With Triple Trend, you also get a complimentary 30-day free trial to my Trends in Motion trading advisory. So it gives you provides some directed focus, smooth your learning curve while you're learning the system. And after the 30 days, it's only $49 a month. So basically the system, Triple Trend initiates a long or short position when the market breaks out and either makes a new X number highest high or a new X number lowest low in price. Triple Trend takes all breakouts and doesn't require any further analysis or filtering. The difference between this version 2.1 and the 2.0, easiest way I think I can say that is this, the new version focuses less on the entry and more on the exit, and that proved to be a big difference. So this new version uses 3 exit strategies. There's 2 trailing stops and 1 fixed money stop. The multiple exit strategy protects profits, reduces risk, and limits losses to a maximum of $2,500 per contract. Previous version, there were trades that in the advisory we simply couldn't take. When copper is volatile, silver is volatile, when not re-entry or anything, we used to use the moving average as our stop loss. So if the gap was 4,000, 7,000, there's just no way you're going to risk 7,000 on a trade. So with this new one, we're just risking a maximum of 2,500. Fits a lot more budgets. Losses will often be smaller than, but never more than $2,500, unless of course a catastrophic gap or something like that happens. By default, the stop loss with the least amount of risk is automatically chosen by the expert advisor. So here's the system rules. Long entry, when price makes a new X number high, we're going to buy at the X number high on a stop order. You can also enter the next day with a market order or a limit order. You risk, on a runaway market getting a terrible fill. I mean, sometimes it'll work in your favor, but easiest way is just you'll see when we get to the charts, it's real easy to place a stop order and just grab the trade. Long exit to position when price is equal to or less than the closest stop loss. Short entry, just the reverse. Price makes a new X number low, sell at the X number low on a stop order. Exit to position when price is equal to or greater than the closest stop loss. So the triple trend version 2.1 MetaStock self-extracting file, or as Jeffrey mentioned, it's like a plugin, add-in. You get the expert advisor, the chart template, custom indicator, Jeffrey had made for me, plus a couple that I just configured easily, and the explorer. Self-extracting, just click on it. It's beautiful. It's got expert commentary, which we'll show you in a few more slides. And you also get the 30-day free trial to the advisory. So this is what it would look like. This is about 5 years of data on Australian dollar. So we have two moving averages. The dotted lines are our long entry, and this is the red one is our short entry. We got dual moving averages. The red price bars are short breakouts, signaled by the short arrow and then the exit sign, and then we have the buy arrows, blue price bars for buy arrows, and then the green exit up here. Pretty simple, but that's all kind of jammed together. We'll look at the chart with a little less data. Yeah, I like to look at 3 or more years of data on my chart. Kind of scroll back in time, get perspective of price levels and how the system's working on that particular market. But again, there's just so much data on this chart. If you're trying to enter into a daily trade here, it's just a little too much. So you can zoom up to this or even zoom in a little closer. So that's what I recommend doing. Get some space in between your price bars. So you can see when the blue price bar pops up here, crosses the dotted line, that's going to be our entry at the dotted line. Do I need to pause for questions at all, Jeffrey, or? Uh-oh.
Hey, Ken, that's completely up to you.
Oh, okay. Does anyone have any questions, or we can pause if someone who wants to take, you want to take a few questions?
Yeah, we had some questions that came in. Let's see. Han says, is it similar to a turtle strategy?
It is. I mean, well, all trend following systems, I think, would be fair to say that they are resemble a turtle strategy. They're the originators, or at least the ones that were famous for it. So I think any trend following system is going to resemble it, but this has a lot of differences to it as well.
Phil asks, is triple trend geared towards futures only, or would it work with stocks and exchange traded funds?
I don't have ETFs or stock data in my computer. I get that question often, and I need to do that. I honestly don't know. I can't answer that.
Andre asks that you use your pointer a little bit more.
Oh, sure.
And Asha says, what are the net loss for the periods in question? And I think he was talking about maybe the slide earlier that talked about profits. But I could be wrong. Maybe Asha could.
The largest, excuse me, the largest losses are going to be $2,500 down the board. On my website, I have a 4-part prospectus, lists trade by trade for the last 42 years or so. You can see the actual trades, and even in the one section, it shows like what the max profit was at any one given point and how that trade got closed out. So you can kind of see how much was given back before that trade was closed, as well as like which ones the losses. And you'll see this consistently down that column. Like the big losers are all like negative 25. So they just get hit out at the max money stop. I was using my pointer on my screen. I forgot to click on the pointer on the. I was using it, but obviously you guys couldn't see it, so I apologize for that. Rookie mistake. All right. So as I was explaining here, so we get a blue price bar. It crosses the dotted blue line here. I added these the long entry and short entry levels here. So that would be the entry point, and of course then we get stopped out here. We get another entry, and then that is a quick stop out. Um, One point of data that you guys would be interested in: the average length of trade for winning trades is about 7 weeks. The average length of trade for losing trades is about 1.4 weeks. So losers are usually kicked out pretty fast. Winners are hung on to. Just going back to those 4 basic rules, let profits run, cut losers short. So, do we have any more questions? We're gonna move it on now. I guess we're gonna move on. So yeah, a market entry is made when the price is greater than the X number week highest high or lower than the X number week lowest low, illustrated by so click my arrow here. So long entry, long entry, long entry, long entry. And this is over some time. You can see the dates down here. It's not like we're just in and out. These are weeks. These are weekly charts, if I didn't mention that before. Little tiny W right there. And then these are the short entries. So yeah, the dual stop loss moving averages closely trail the market and stop us out hanging on to our profits. Plus we use a $2,500 max money stop from the entry, or in any trade the stop loss with the least amount of risk is used. So sometimes it's $2,500, and in the advisory I'll also tell you like what that risk is and which stop loss would be using. Sometimes it'll be a $1,200 risk on that trade, sometimes $1,800, sometimes $2,500. Depends what market it is and what the volatility is at that time. I mentioned earlier too, you can also use a market order or limit order on the day following the initial breakout. Some markets that works, some markets it doesn't. All right, so here's another chart just showing some examples of market breakouts. This one is cotton. If you remember, we had 2 good trades in cotton last year. Here's a pointer. So, and the volatility in the markets, like I was mentioning before, almost every chart we're going to look at on the short side, giant price bars. When I started trading years ago, the margins were much lower. A few markets had this kind of volatility, but not many. You could trade T-bonds with a much smaller stop then. Let's see. Having the persistence and discipline to take multiple signals and getting stopped out with, on each with small losses or small gains every time the market corrects, sometimes necessary to catch big money trends. This is that big move in silver. I'm gonna chart of silver here. So sometimes, which is bigger than this whole previous section with multiple trades, but sometimes we just have to sit through these. We're gonna have a gain, a small loss, gain, that's a gain, and then of course the big payoff. It's easy to get frustrated. You're a few weeks go by, you're getting in and out, whatever. But you just follow the system, follow the rules. It's going to catch the big moves. There's no way it can't catch the big move if you follow it. See, we're looking at, this is a trade we're currently in the advisory. Got a short entry, broke through our X number lowest low, and the next frame will show you what the expert advisor looks like when you're in a trade. So when you click on commentary, this was what it'll show you. Whatever in a short position for T-bonds, to tell you the stop losses and then the current price. Gotta get used to this arrow. Apologize for that. There's another trade we're in. Actually, well, this is soybeans. We were stopped out of this at the end of the week last week, where you see this price bar hitting this moving average. Now on this chart, this moving average just shot up and hit that. Actually, the moving average hit the price bar. The price bar didn't hit the moving average when this bar appeared. So um, I was using a couple different data sources, and which gives you different stop loss, different closing prices for continuous contracts and data like that. So I was one tick over the low of that day, so I got stopped out here. This trade continues. Hopefully, it just reverses, just so I don't feel bad anymore. And this is the expert commentary for that. It's telling us we're currently in a long position. These are stop losses and the current price. So that's a nice feature, MetaStock. And Jeffrey spent a lot of time on the expert commentary and everything just to get it perfect. There's another trade we're currently in, soybean oil. Went long right here, this little blip, and that's where we're at now. And this is the commentary for that one as well. So these are our only 3 open trades with the system right now. I have something I call TradeR, which is trend radar in the advisory. The markets that are closely bracketed or that are where the price is getting close to either the long entry or short entry, I'll list the closing price and what the entry price is. So just so we know upcoming, the subscribers know the upcoming trades. And that's my website where all the information you can find about this. And so the triple trend version 2.1 self-extracting. Oh, we went over this before, but Jeffrey had made some extra things here. We get the PDF instruction manual, expert advisor, chart template, custom indicator, the Explorer file, and a 30-day trial of the Trends in Motion advisory, all for only $4.99. Like I said, me and Jeffrey put a lot of work into this. Back testing, it works fantastic. Trading forward, it's working good so far this year. So, Jeffrey, where do you want to go from here with this? Uh-oh, I think we lost Jeffrey. There he is.
Okay, no, I'm here.
Okay.
I'm always here.
You're always
I was just
here.
being quiet. Okay, we had some questions in terms come in, so let's go ahead and cover those a little bit.
Sure.
Hans wants to know, will it work well for CFDs, which are also leveraged?
Yeah.
So, in other words, a contract for difference in Australia, for example, or in the UK.
Right.
It's not legal to trade CFDs in the US, but obviously this would be for international trading.
Right. I have quite a few customers in Canada, and they've asked me that before, and yeah, if it's a future-based market, then I would say yes. If it's more like stocks, like I said, I don't have the answer to that. I would need the data to test it on. So.
And generally, my experience has been with systems that work well. They're very cross-market oriented. Like a system that works well for like a futures market, for example, usually works fairly well for a stock. But of course, your experience may vary.
Right.
So it's very, very important to be able to go in and say, okay, well, I want to trade Apple. How would this look? And that's kind of the nice thing about MetaStock is you can actually go in and see exactly where the trades would have taken place and where the exits were, because I guarantee that triple trend version 2.1 will work on some stocks and it will work absolutely just as well on other stocks except for generate no profit. Right. So it's important to be able to identify which ones do work in terms of generating profit and not generating commissions.
Sure, so. That's a good point. And as far as Forex, I have tested on Forex. I think it's close to, it makes a little money, very little. Definitely not worth doing. Profit factors like negative on some and just over 1 on others. So it's like really a wash. If you traded 18 Forex markets or even 8, you'd probably break even at the end of the year. Well, your broker a fortune, but he'd be in the Bahamas.
Mark asked a question.
Sure.
is the code that we worked on, and this is your question you really have to answer. I don't know. But is the code that we worked on, is it going to be open code? So in other words, if somebody purchases it from you, are they able to go in and actually edit it and
Oh,
change it and adjust it and see what's going on? I
I
don't know.
I have the one, I have that password protected, but I can also supply an unpassword protected one as well, so that's not a problem. Or I can just tell you what the password is if you purchased it. That's not a problem.
Daniel says, will it work on all stocks? It will, but your profit performance may vary from stock to stock.
Yeah, I think you'd have to run it over a gargantuan basket and then, really cherry pick and see which ones and go back in time and see how that, panned out, you know.
You can apply it to any stock or any instrument that you want, but yeah, again, it's going to take a little bit of jurisprudence in terms of looking at it. Just a little bit of a note, Ken. Can you tell us a little bit more about the advisory service?
Sure, that's a good question. So the advisory service also got revamped with this system. I used to have three trading systems on my advisory, and it was just too much work for me in an hour and a half time, trying to take care of my kid and doing that. It was just, I was so stressed out every day. So the new advisory service, just one system. With this system, it basically takes every trade that's signaled by triple trend in the 15 futures markets that I list in the prospectus. And you saw, like, I don't know how many was in that list with the big trades, but there's probably like 9 or 11 in there. So, and then there's a few others. But what was my point to this? Oh, the advisory. So every trade that's taken on the advisory is directly off the chart. There's no there's no improv going on. It's strictly, so in other words, the advisory should closely resemble the actual track record for the year of whether it's back tested or actual. So I hope that answered the question and made sense.
We have a question that's
What is the
interesting.
significance of triple? Uh,
Yes.
I saw that. What is the significance of triple? Is it three moving averages are involved? No. Originally, when I came up with triple trend, I came up with that in 2002. I just had three different criterias to determine the trend accurate enough for myself to trade it and be profitable from it. So, and I don't know, when I came up with it, it just sounded kind of catchy, so I just stuck with it. Thanks for asking.
Wow. Okay. Yeah. Good question. I didn't know. Okay. So let's. Obviously, this webinar ended up a little bit shorter than usual, but that's okay. We have a 3-day weekend that everybody's kind of in the middle of. So just to kind of recap what we've talked about. Obviously, the add-on's an interesting thing, something that we've worked on pretty hard. I can say that I would encourage you to try it. Let me know how you like it. I'd love to hear feedback in terms of the advisory service, how you like the experts we put together, the chart templates, etc., etc., etc. So I'd encourage you to go ahead and do it.
Oh,
To sign up for it, what I would have you do is just go up to tripletrend.com, and again, I want to hear how you like this product. I want you to send me any type of feedback that you have. So when you do decide to go ahead and buy it, whatever feedback you have for me, go ahead and send it directly to me. I'm going to give you my email address. It's jeffrey.gibby, and I'm going to type this out at reuters.com.
we had a couple questions. I don't know if you saw, Jeffrey. The Simon was asking what MetaStock version is required by Trip. So with the file that we made, what would we need? What version would that work in?
Oh yeah, that's a really good question. Thank you. MetaStock 11 or later. So it was actually compiled in MetaStock 11, which means that it requires MetaStock 11 to use.
But we made it in Pro, but you don't necessarily need the Pro, right? It could work.
No, end of day or
end
Pro
of day will work, right? And that's one thing I should probably mention. To trade my work, you just need an end of day trading platform and data. You don't need expensive, intraday data or live data. So that is one benefit too.
The other thing
data
is
much cheaper.
Yeah, it definitely is. It definitely is. The other thing that I should mention is I did ask earlier, and we probably had about 12 or 13% of you actually haven't made that decision to go ahead and buy MetaStock yet, if you like what you saw today and you want to pick it up, we'll actually give you a free trial. You just have to mention that you're doing the triple trend, and we'll let you get MetaStock on a 30-day free trial.
Right. And actually, yeah, right. You get MetaStock and triple trend for free for 30 days. So you can try it out if you're not currently using it. And all the charts.
Andre and Dan want to look at the charts again. How do you feel about that, Ken?
Sure. Let's look at them. Is there a chart in particular you want to see? We got bean oil, soybeans, T-bonds, silver, crude oil. I don't think I have crude oil in these examples. We're loaded on a PowerPoint right now, Carl, so I don't have crude oil loaded in here. We have Aussie, Euro FX, Swiss franc, cotton, silver, T-bonds, beans, and bean oil. So I don't know if there's one of those you want to see instead. I don't have crude oil loaded. Probably would have been a good one to load. Will they see my screen if I pop one up or no?
I can show you how to load that.
Might take a while.
But it would require you to install some software. We probably here's an idea. Ken, what's the best way to get a hold of you if somebody has questions or they want to see some examples or they want to talk a little bit more about this?
Sure. Let's type that in there.
What's a good email address to use for you?
So you can contact me at tripletrend@yahoo.com. I answer my emails as quickly as possible. If they're elaborate questions and a whole bunch of them, it might take me a day or day and a half to think about them and give you a quality answer. But easy answers, I get back to everybody pretty fast. Do you use daily time frame?
Go ahead.
Miles is asking, do I use a daily time frame? It's a good question, Miles. Yes, you can use you can use this on daily charts. It's about half as profitable on a daily chart as it is on a weekly chart. So that's a big reason why I just go with the weekly. It's just a more quality signal. But yeah, you can use it on daily, and you'll see which markets it works better. Obviously, it works better on daily charts on some markets than others. It's not across the board flat, Let's see. Any other
I'd
questions?
also like to point out one of the things that we've kind of been spending a lot of the time lately on and that's really kind of integrating, the expert advisor properly. And I think that's so important when you get a sell signal to know exactly what your plan is. So many traders get stuck in, getting a good entry signal and they blow it up on the execution of that signal. They don't have their stops in the right places. And Ken was very, very adamant that we had that in there, that we had it in the commentary, and that it appeared when it was most applicable. So that's one of the things I really like, is it not only does it tell you about where you should be getting into the trade, it also tells you where the stop should be placed and all of that kind of stuff, which I think is important.
Saves you some time. It saves you some time during your chart, or worried about it, you're making a mistake, especially in your learning stages, But it's nice to see that at a glance too. So even if you're not trading and you're just kind of following the markets or paper trading, or you can see that too.
Carl asked a question.
Oh, yeah,
do you
Carl.
roll into the next month's?
Yeah.
Go ahead.
Do you roll into the next month's futures often? That does occur. We did roll with soybeans when we got stopped out on, I think, like Thursday last week. So that we did roll once. We rolled from March to May, and on a roll, if that occurs, we just sell and buy at the market, just to ensure an even transition there. So if you lose it on one, you're going to gain it on the other. So, just to ensure that smooth transition, just do market orders. But it's not very often, probably 1 in 5 trades we roll. So you can also, if on my website, you can click on my Facebook page. It lists every weekend. Every weekend I publish a free bottom line weekend update. You're free to sign up for that at the bottom of my website. And you can just kind of go back and see week by week. I just started trading this system live for my subscribers back in February. but I've been trading it myself since October. So, but it'll show like a February to this point of the trades we've taken, and then it'll show my previous systems as well. Let's see. Mark Keller is saying, are asking, your triple trend website shows incredible ROIs, but are they called but they're called test results. Why are not these actual results? Well, like the system just came. I just got it ready for sale in February, at the end of January, beginning of February of this year. It's a revamped version of my previous systems. I used to have a daily and a weekly system, and yeah, I focused too much on the entry with the previous systems and not enough on the exit. So focusing more on the exit really just made everything jump. The numbers jump across the board. So in back testing, that's what those numbers are. But yeah, I haven't been trading it live back down to 2006, where I think that ROIs are showing on the website.
Actually, now that Ken says that, I remember a conversation I had with him back in February where he's like, I'm so excited about this version 2.1 where I have the updated system test that I'm going to basically solely focus on that. I'm going to ditch the other two systems that I'm using. So I was fairly excited about it when that happened.
Definitely. Because it's using a lot, some of the same criteria, the numbers wise, but the previous versions I required filtering and subjectivity, and and you miss trades with that. I mean, you're gonna get scared. You're gonna talk yourself out of them, and you're second guessing, and you're just gonna miss the big ones. So I needed something mechanical where someone could where they don't need my advisory necessarily. They just can do this on their own. It's a no-brainer basically. So, Carl's asking, are your decisions made only by weekly charts? Yes, that's how. Yeah, I traded off the weekly charts, and so yeah, I don't trade it on daily anymore. Hans, not a lot of real results available. That is true. There's not a real. I'm building a real track record right now. Like I said, I've been trading this since October, but I have been trading my previous versions for the last couple of years, and like I said, this is just I don't know, a better tuned version of those. So it's not like it's all new or untested. It's just modified would probably be the best word.
Enhanced. Too.
Enhanced, there you go.
Yeah. Okay, well, let's see. I think we have one more person typing. We'll see what they had to say. Maybe. They decided not to. Okay, so just to kind of wrap up, thanks for coming, everybody, today.
Yes, thank you, everyone. Like I said, I appreciate your time. I know there's other things you could be doing with it, so I appreciate your interest. Feel free to email me or Jeffrey. Visit my website.
I look forward to hearing your feedback as well. I mean,
Absolutely.
This is something, we always, we spend so much time developing something like this out, and we've spent a lot of time in this particular one. And you always kind of get a product like this ready and release it, and you wonder what the feedback's going to look like. And I anticipate this one's going to have some very, very good feedback, but I want to hear that from you. So definitely drop me an email after you try this. Let me know what you think, and I'll be looking for those emails and those suggestions from you.
Great. Well, thank you, everyone. Thanks for attending, and have a great night. Oh, Don just popped up a question. Oh. We're still on, right?
Sure, go ahead.
Okay, Don says, looks like stops based on Kaufman and Simple are the same. I'm not sure on moving averages. What do you mean by that, Don? Can you elaborate? One thing I should mention, the dual stop loss moving averages, they are the same time period, but they're different moving averages. So that's why they move in a different fashion.
Yeah, they're not the same value. So in other words, I kind of tested.
Oh, Don was asking, are they the same period? Yes, they are. They are both the same period, but different different types of moving averages, different formulas. So, but the same time period, yes. All right.
Okay, great, guys. Thanks for coming tonight. We're going to go ahead and wrap up. Appreciate your attendance, and we'll see you next time in the MetaStock webinar room.
Great. Thanks again, everyone. Good night.